Hi, Jonathan York, Bay Financial Partners, looking at investment markets. Still a pretty choppy time out there for US equities, sort of setting fresh highs, and then sort of worries over the sort of rising cases of COVID. Saw a pretty major sell-off on Monday. But around two-thirds of the losses were regained the following day as sort of bargain hunters came in. But also as well, earnings are pretty supportive out there, and really sort of guidance for sort of third quarter and towards year end is still pretty constructive for equities. What's also quite interesting as well is the Fed sort of reiterated that they still see the sort of rise in inflation as sort of transitory, short term, and that they're still there to stay the course. What's also quite interesting as well is the 10-year note, which is really sort of the sort of bellwether for U.S. interest rates. That's sort of backed off from its highs of sort of 160, 170, currently hovering around that sort of 1.3 level. Now that's obviously quite interesting because if they were looking for sort of increasing rates from the Fed, then potentially you'd expect to see that sort of trade a little bit higher. Indeed, only sort of 3-4 months ago they were talking about potentially that getting above 2%. So at the moment, it sort of seems steady as she goes. There will be certainly a little bit of sort of volatility out there, but certainly the Fed, has reiterated that they are there to stay the course with this low interest rate policy, and really, won't be jumping ship anytime soon. Oil certainly backed off quite a bit. That's sort of well below that sort of $70 now on WTI. Really on the back of OPEC coming out and now sort of potentially looking at increasing supply. Certainly quite interesting times in the UK. Sort of Freedom Day has sort of come and gone now. Most of the restrictions now been relaxed or removed. But so what is really quite interesting is the health minister has now tested positive for COVID. He's in self-isolation, as too is the finance minister and also the Prime Minister Boris Johnson. So in a strange sort of irony, Boris Johnson celebrated Freedom Day by being in self-isolation. Now, certainly while the UK has done a pretty good job on the sort of vaccinations now, sort of over 50% of the population has received its full vaccination, the sort of double shot. But what is interesting is that, as the sort of restrictions are starting to be lifted, and certainly with the major sporting events we've seen over the last sort of 2 to 3 weeks, cases in the UK are rising quite dramatically on the back of this new sort of Delta variant. They've gone from sort of 3,000 or 4,000 cases, sort of 5 to 6 weeks ago, now to around sort of 50,000 plus. Now, while sort of hospitalizations and sort of death rate is sort of certainly well down on the sort of peak of the pandemic, but that's still quite a few cases to obviously try and contain and really sort of stop the spread. So it certainly will be very interesting to see how this sort of plays out in the next sort of 3 to 4 weeks. Europe appears to be sort of managing it slightly better in terms of the sort of cases and big sporting events. But obviously now it's been sort of hit by pretty major flooding in sort of parts of Germany, Holland and Belgium. And that's really just going to put fresh pressure on the sort of supply chains out there as well. And I say it's just going to be very interesting to see how this sort of plays through, because certainly large areas of those countries have been pretty well devastated. In Australia, the sort of New South Wales cluster are now spread to most states. You've got Melbourne sort of locked down, Victoria. You've got South Australia going into a lockdown as well now. Queensland not looking too good as well as sort of cases start to increase. But what the authorities might take a little bit of heart from is that New South Wales certainly seems to be now sort of taking on board and how serious it is. Certainly the queues for tests, etc., and vaccines is really sort of growing day by day. And although the cases certainly in New South Wales are running at around sort of 100 new cases a day, so far you haven't seen the sort of mass explosion that potentially they were looking for of sort of 5, 6, 700 new cases a day. So just maybe, possibly, they might just be sort of getting on top of this sort of latest outbreak. Here in New Zealand, a lot of discussion now about interest rates. Certainly the last sort of commentary from the Reserve Bank appeared to imply that they were looking at sort of moving earlier now, much earlier than first anticipated. Indeed, potentially there is the sort of possibility now of a rate increase in August. Now that's a pretty major sort of policy change stance because you were looking at no sort of interest rate increases until sort of 2023, 2024. Indeed, one of the major trading banks now is predicting that we will see a rate increase in August, also one in October and one in November. Now, if that is the case, the OCR would then go from 0.25 to then 1% by year end. Now, what will be very interesting to see what happens with sort of mortgage rates. Again, one of the major banks has increased its rate already, gone up to 2.55, but that's still well below the sort of peak from the last sort of hikes, which was 2014. Now, obviously, it'll be pretty interesting to see what it does to the housing market because certainly that's still pretty rampant out there. And, as sort of discussed here many times before, given the sort of record low interest rates, the sort of limited supply and the excess demand, there was always going to be pressure on prices to the upside. But if you do start to see a little bit of sort of pressure on mortgage rates and those increasing, then potentially that might just bring house prices down just a little bit. And it'll be very interesting to see how that sort of plays through then in the next sort of 6 to 9 months. And also quite interesting as well because the Reserve Bank, was sort of forecasting that sort of house price sort of inflation, if you like, over the next sort of 12 months potentially would be sort of flattish in sort of June, July of 2022. Government's still facing a little bit of pressure on the sort of COVID vaccine rollout and also as well sort of managed isolation. Certainly there's some sort of major issues there. And the issues sort of centre around the suitability of the managed isolation facilities, given this highly sort of contagious Delta variant that is now sort of coming into really New Zealand waters, really on the back of 3 ships, and some of these crew members that are contagious are now being moved to managed isolation facilities. But certainly the New Zealand economy is still doing, sort of pushing on a pretty robust rate, and that's really one of the reasons why the Reserve Bank is maybe looking at trying to get ahead of the situation and starting to increase interest rates. But obviously, if they did move rates, I don't think there's going to be any sort of major big increases like a sort of percentage point, etc. Because, like I say, they're coming from a very low base. On a 0.25 OCR, you move it up to 0.5, that's a 100% increase. And if we did see a quarter point increase in the OCR, potentially that wouldn't do too much out there for sort of term deposit rates. So obviously savers are still sort of struggling out there for income options. And if you're interested in discussing what is available, go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.